If you're earning 500K plus on a W-2 and feeling like you're getting hammered on taxes while everyone talks about business owner strategies, this video is specifically for you. Most tax content on YouTube assumes you own a business or invest in real estate. But what if you're a high-earning tech professional, executive, or specialist who just wants practical, applicable strategies that actually work for W-2 income? That's exactly what we're covering today. This content is for educational purposes only and should not be construed as personalized tax advice. Please consult with a qualified tax professional for your specific situation. Okay, so here's your reality. You're earning great income, but your tax optimization options feel incredibly limited compared to business owners. The standard deduction for 2025 is $29,200 for married couples. Unless your itemized deductions exceed that threshold, most of your potential tax strategies don't even activate. But here's what most people don't realize. Charitable strategies can be your gateway to meaningful tax optimization, even on W-2 income. Now let's start with the foundation and build up to the advanced strategies. Okay, think of a donor-advised fund as your charitable savings account with immediate tax benefits. The process is as follows. You contribute today, receive the full deduction immediately, then recommend grants to your charities whenever you choose. For W-2 earners, this solves the timing problem. You can make a large contribution in a high income year and distribute the funds over time as your charitable interests evolve. Here's a pro tip. You can contribute appreciated stock instead of cash, avoiding capital gains while maximizing your deduction. Now, if you're over 70.5, this strategy is incredibly powerful for your required minimum distributions. You can donate up to $100,000 annually directly from your IRA through a qualified charitable distribution. This satisfies your RMD requirement. It doesn't count as taxable income, and it doesn't inflate your adjusted gross income. So this keeps you in lower tax brackets and preserves eligibility for income-based deductions and credits. This strategy addresses a common W-2 challenge, wanting a larger deduction than your current cash flow allows. Here's how it works. You borrow money and donate it right away to get your tax break this year. Then you take the money you saved on taxes and invest it. You don't have to pay back the loan typically until much later, and usually with no interest payments while you wait. The idea is simple. Your invested tax savings hopefully grow bigger than what you borrowed. So when it's time to pay back the loans several years later with interest, you still have money left over. But here's the important part. There's no guarantee your investments will grow. You're the one responsible for making that money grow over all those years. The timing advantage is crucial for W-2 earners. You can capture the deduction in high income years while your invested tax savings compound for years and years before repayment is due. When structured properly with qualified charitable organizations, this creates legitimate, sustainable tax optimization. Many high-earning W-2 employees hold significant appreciated assets, company stock, index funds, or other investments. Instead of selling these assets and donating cash, donate the appreciated assets directly. You can deduct the full fair market value. You avoid capital gains tax, and it counts toward your itemized deductions. The IRS allows deductions up to 30% of your adjusted gross income for these gifts, with a 5-year carry forward for any excess. This strategy is particularly effective for tech employees with appreciated company stock. This is the advanced strategy that changes the game for accredited investors typically earning 500K plus. Here's the concept. You purchase specialized products, often in emerging medical or technology sectors, at wholesale pricing, then donate them after professional appraisal determines their higher fair market value. The leverage typically comes out to be around 4 to 5 times. This is what makes the math work. For example, $25,000 out of pocket can sometimes result in a $120,000 deduction. This creates significant taxable income reduction. And unused deductions carry forward for 5 years. This isn't about losing money to save money. Even without charitable intent necessarily, this functions as a legitimate tax optimization strategy because you're participating in these companies' go-to-market strategies. Now here's an important distinction. This is not a conservation easement. This isn't on the IRS's questionable transaction list. But precision in documentation and compliance is absolutely critical. The vetting process is rigorous because we're identifying opportunities where specialized products exist in emerging markets. That's where the valuation differential creates the opportunity. See, the real power comes from combining these strategies based on your specific situation. For high stock option exercise years, perhaps it's charitable bunching plus donating appreciated company stock. For planning for retirement, it could be DAF plus UCD strategy. For maximizing current year deductions, it could be gift financing plus leverage charitable gifting. And for multi-year planning, it could be asset donations plus DAF for ongoing distribution. This is how we help high-earning W-2 clients create $30,000 to $120,000 plus in deductions while maintaining complete legal compliance. The reality is this: the tax code provides these opportunities specifically to incentivize charitable giving, and they're completely available to W-2 earners. Most tax content ignores high-earning employees because the assumption is you don't need sophisticated strategies. That's simply not true. If you're earning $500K plus and tired of feeling like advanced tax strategies don't apply to you, they absolutely do. I'm here to share practical, applicable strategies specifically designed for your situation. Hit subscribe and like, and let's continue building your comprehensive tax optimization roadmap.